Good.
Good afternoon, everybody.
Ladies and gentlemen, Josh Leffler.
Okay. I'm Derrick Oldensmith. I just gained a little weight over the last 24 hours. No, just kidding. Okay, everybody can hear me? Yes? Somebody say yes? Perfect. All right, so they want me to start by saying this. Derrick Oldensmith and myself are associated members of T3 Trading Group, an SEC-registered broker-dealer and member of FINRA SIPC. All trades made by us are placed through T3 Trading Group. I'm supposed to read something else too, but I forgot where. Okay. Anyway, that's that. Oh, my disclosures. I'm short Tesla. I told you guys that overnight. I'm going home short Tesla. I just think obviously it needs to play catch up to the rest of kind of the sell-off that we had in tech. And I think, you know, we're due for another $5-6 on the downside. So that's that. Let me minimize this and share the screen if I can figure it out. Perfect. All right. So, start with the SPY. SPY finished down $1.36. Qs down 6.15, and IWM had strength up 381. Coming in this morning, we saw some early strength in the IWM, followed like a follow through from the buying strength of yesterday. I wish Derrick had a daily chart on here, but he doesn't. It makes it very difficult for me, but that's okay. So following the strength of yesterday's buying of IWM, we wanted to see that kind of rotation continue. Thank you, Pat. There it is. We wanted to see the rotation of that continue, and it did very early on. We saw Qs kind of peak out at or around yesterday's high, the day before's high, and then they instantly sold off and didn't really uptick from there. This is exactly what we want to see. Even as a bull in this market, like, you could not, there's not enough money out there to make all three indices go up together all day, every day. So the exact scenario that you want to see is the overbought tech come in and the underbought or, you know, underweighted IWM kind of play catch up. And that's exactly what we're seeing today. Coming into this morning, we saw early strength in IWM. So I said to look at like Carvana through the 16 level. I bought a little bit pre-market just because I saw the early strength. We did okay there. Plug was another one that was kind of breaking out of that $9 level. Obviously it reversed on the day, but you could have made some good money early on. And then what was the other thing I traded? Oh, Nvidia was the one that I really liked this morning, and I said that as soon as the market opened. It had a really strong up move in the first 15-20 minutes, which was enough to get me to kind of take my profits up here. I held a little bit, and I think eventually I got out like around this kind of bounce into here when it couldn't really, it was just, I had very little left and it was what it was. So that was that. Derrick wanted me to talk about PLTR. I think for him it was just a swing position on an oversold on an extension. Actually, hold on a second. Let me just check here. Yeah, it was just a little bit extended on the gap up, and he was looking to short it, and I think he did well there as well. I can't see his executions, so I couldn't really tell you how he did, but I do know that he did well with PLTR today. I'm trying to think what else. I mean, look, can't stress it enough. The rotation is happening. I think today was a good indication of that. Like I said, towards the end of the day, I think if IWM, gaps up tomorrow, especially to like 189, 190, it's going to be a layup short. Even at that point, if it comes back, if we short it at 190 and it gets back to 188, 187, that will still be a very healthy, bullish looking chart to me. But on a third day up, coming from 177, now we're at 190 in 3 days. That to me is a layup short. Nvidia, opposite. We have that kind of gap there from the earnings and the guidance. people are not just going to give up on the video altogether. There's so many people out there waiting for a pullback just so they get the opportunity to buy it. So I think the initial dip here will be bought. I would love to see a gap down tomorrow into like the 370 area, at which point I would try it for a buy, but I wouldn't like get married to that because I think eventually that fails too. And quite honestly, I think eventually NVIDIA will fill this gap. I don't know that it'll be within the next couple of days, but it could certainly trade between 370 and 400, for a while, and then ultimately it'll dictate one way or the other once it finally breaks out one way or the other. And I think the market in general is going to have a lot to do with that. I think if the Qs are finally going to see some real follow through to the downside, then I think NVIDIA will follow suit. And I think vice versa. If the Qs actually stabilize and can kind of go, 345 to 350, and we can kind of trade there for a while, then I don't see any reason why NVIDIA wouldn't, kind of continue to trade in this range and go from there. So that's what I got. What do you guys got? Holy cow. John Lee, Josh, did you take the PLTL short? What would give you confidence to short near the high? Was this a quality setup to take a size of pre-market game planning? Would you set a level where you're beginning extension reverse trade?
Good afternoon, it's T3 Trading. How can I help you?
Sorry, Billy's just talking in the background. I did not take the PLTR short. I was not sitting on the desk when Derrick did it, but I know for a fact, based on the way that Derrick trades, that this was just an extension trade. It's at 17. The ADMA is at 14. He's $3 extended on a $15 stock. That's Derrick's like bread and butter. He loves extension trades, and I think for him it was just a matter of timing it right, playing it right, and certainly as it got extended into 17, for him it was a short. Honestly, I don't even think that Derrick knew that it was going to roll over $3 the way it did. Like, this is just one of those scenarios where you put yourself in the right situation. And if you're in the right situation and you continue to follow the game plan, sometimes it's going to continue in your favor. And sometimes, he would have got stopped out on the remainder of the position. This happens to be one of those days where the market, participated. We saw some weakness in some other areas as well. And so on the extensions to 17, he's taken the short. And honestly, once it broke the opening low of 16, like if I were shorted at that point, I would feel really good with it. And I would kind of just ride it out from that point forward, and I think that's what he did. I can actually see on his screen that his last cover was at close to 15, and his highest short was 17 something. Like Derrick played this perfectly. Would you set the different sizes if it hit 17, 1750, 18? So that's really more of like a personal game planning issue. For me, yeah, exactly what Pat just said. I don't think he was expecting a full reversal. It's you put yourself in the right situation, sometimes it's going to play out for you, and that's what putting yourself in the right situation does. It gives you the opportunity for when things really do work. That's why you're there. And that's also why it's important to stick to the game plan when you're cutting your losses, because, if he was shorting it there versus a certain level and it continued to go higher, like, again, everybody's a little different, so I'm sure he probably would have just added more or held what he had and waited for the 1650, 16 to kind of start covering some. But at the same time, he put himself in the right position. He had enough size at 17. It kind of rolled over, and it never really gave you a reason to get out, other than just kind of trimming and trailing along the way down. When you exit the trade, once being okay, I think I totally got that question. What else? Come on, you guys have been asking for me for months. I'm here. Fire away. With NVIDIA, did you buy through any particular level once that volume came in? And also on the exit side, were you game planning for more of a scalp trade? Yeah, for me, it was 100% a scalp trade. I bought NVIDIA pre-market a little bit. Because Qs, I think, I can't remember exactly at the time, but Qs were up a little bit. It's not like tech was showing extreme relative weakness. NVIDIA was kind of, hovering around where it was. I bought a little, thinking that honestly we would take out yesterday's high and kind of continue to go. For me, and Derrick will tell you this, like without a doubt, I always sell early and cover early. But I have the unique ability where I tend to be right more than I'm wrong, which is not usual with traders. And so that gives me the ability to be out of trades early, do that often enough where I'll kind of still make money trading. Most traders that build a successful career are wrong more than they're right. But if you manage your risk accordingly and you kind of stick to your game plans, then if you cut your losers quick and you ride out your winners, that gives you the ability to make money over the long term. I am more kind of 50-50, so I tend to be out of my trades earlier than I should. But that being said, buying NVIDIA pre-market and then watching, the early action, I mean, we instantly went from 398 to, sorry, let me just pull up his thing here. It's so tough on his charts to see what's going on. We instantly went from 388 to, 394 in the first 5-minute bar or 15-minute bar. Like that to me, $6 is $6. I don't care, the quicker that happens, the more likely I am to get out. Because when you get a $6 move in a matter of, what typically would take an entire day, and you get it in a 5 or a 15-minute bar, that to me is extension in its own right. It's not extension from the moving averages, but it's extension compared to, just where it was and where it's coming from. Price action is a big part of how I trade. So the quicker things move, the more likely I am to kind of capture some of that stuff. So that's the answer to your question, Kyle. Ricky C, what's your final target for Tesla? That's a good question. I think Tesla reasonably, I think Tesla will test 220 tomorrow. I honestly do. Where it goes from 220, I don't know. Again, it's another one of those stocks, just like NVIDIA. It just came from 170. It went to 230 in literally a straight line. Anybody that missed that move is waiting for the slightest inclination of a pullback so they can buy. Usually we'll see a bounce on that buy, and then it'll determine, what the next move really is. Is the real move from there, okay, the trend is going to continue up, or does that kind of initial dip buying fail, putter out, and it kind of comes back down, and that's when you actually see, like, okay, that stock has topped for a little bit. So for me, I'm covering, in the 220, 221 area. Again, I'm also playing with profits because, this morning I was waiting for 230, and then Brant, who was sitting here, said, I'm shorting Tesla. I think he said it in the room, it was like 228, 229. I was like, all right, maybe it doesn't even go to 230, so I'll just do a little bit. So I did a lot lighter size than I normally would if it got to the 230, 231 area. It did happen to get to 230. I wasn't sitting here when it happened, so I did not add. But I made good money on the short side on Tesla today. And so I actually covered at one point. Let me go back to the chart here. So I actually covered down into like this move here. I think I was covering around like 226, and then I was flat. When it got back up to 229-ish, I put a little bit back on, smaller size than I was up here, because I didn't really know, like, if we were going to, if it was going to take everybody out here or if it was going to kind of roll over again. It did, and then once again, I was flat back in this kind of 225-ish area because, it tested 225 once, bounced. Now it's testing 225 again. It was bouncing, so I kind of got out here. And then it kind of hovered around 224, 225 all day. It was just at the end of the day when the Qs really started to sell off, NVIDIA really started to sell off, some of these other big names really started to sell off, that I'm kind of just sitting here thinking, okay, there's somebody in there that wants to own Tesla. That's fine. They're not going to be there every day for the rest of this week. Maybe today is their day that they're kind of, for whatever reason, their fund or the institution is like, hey, we got to buy some Tesla here. So I just think there was a buyer there all day, but I think eventually, that buyer will subside, and I think, the sellers and the shorters will take over. Like, if you just think about it on a big picture, like where, Tesla came from $90, $100 6 months ago, 5 months, whatever this is, like that's insane. 90 to 230. Even if this thing goes to 250, there's going to be a point where it comes back to like 190, 180. I won't be there for all of that, but I'm just saying, like at this point, 160 to 230 in a 2-week time period, I'm okay taking a short, seeing where it goes. Ideally, we see 220 or lower, and then I'll kind of see how it reacts there. You've talked how you were a field trader. Can you just speak to that a little bit? And you were successful doing that. You touched on it a tad just now as I was typing. Sure. I'm a field trader when it comes to price action because, I was taught early on in my career to trade contrarian. So that is the exact opposite of momentum. So in the old days, it used to be very predictable. Markets work in 3s, 5s, and 7s. I don't know why. I don't know whoever came up with that, but it just used to work that way. You get 3 days of move, you get 5 days of a move, or you get 7 days of a move, which is why typically we'll say like, okay, day 3 up, time to take the other side. Day 3 down, time to take the other side. So I'm a contrarian trader that way. I also look to do that in smaller time frames, especially with the indices. I'm a big fan of kind of trading with field trading on the indices. To be honest, the one thing I'm like super pissed off about is that I missed the Qs short today. I was a little more focused on Tesla. I was a little busy here in the office because it's the first day that I was back with a couple of the other people that are here, and so it just like I was kind of all over the place. But I have, and I was saying this to Derrick this morning, I've been shorting the Qs literally every day since I think like this breakout here, and I've somehow managed to make money doing it. And then I look back at the end of the day or at the end of the week, and I'm like, God, we went up another like whatever 5 points or 6 points, but I still managed to make money shorting. And so that for me plays into like how I'm more of a field trader, because I just like I look for big kind of moves into certain levels, and then I kind of take the other side. AMD for me is the perfect example, based on the other day, based on the NVIDIA earnings. AMD got dragged up off NVIDIA earnings. Nothing has changed about AMD's business because of what NVIDIA said. Yeah, the hype is there, AI, this, that, but it was NVIDIA that raised their guidance. It's NVIDIA that everybody's focusing on for the AI. And AMD just gets dragged up for that. So I think on... I think this was Thursday of 2 weeks ago or whatever it was. But I remember it was a Thursday or a Friday, and I was shorting I was shorting AMD like here. And I was like, okay, I'm comfortable adding if it gaps up. And pre-market that next day, we gapped up, and I was down a significant amount of money. But for me, it comes down to feel, right? Again, 3-day move. On top of the gap from 105 to 115, like there was just so many things lining up there that it's like, okay, it can't just go up forever. There has to be a turn at some point. And so it's a matter of kind of gauging your size to be able to do that, right? I'm shorting AMD at 126, let's call it, maybe even 126.50. I'm okay if it goes to 130 because I have enough size, or I have a small enough size that if it goes to 130, I can either double up or maybe add 20% or 30% to my position. Now, granted, AMD goes to 140, I am miserable. I am not happy. I'm probably taking a significant loss, but that's kind of the way I trade. Like, again, it comes down to feel. We just came in a straight line, 3 days in a straight line. We had that gap up. It's getting into 130. It's only being dragged up because of NVIDIA. Eventually, anybody that's buying AMD down here is going to take some profits. And that's when you kind of get the profit takers and the short sellers working together to bring a stock down on a day. And I made really good money on the AMD short, covering it back into the 8 day. Again, I was early, always am. I think my last cover was probably closer to like 121, not like 117 or anything like that. But I made good money. I played it right. I timed it right, and I was like totally happy with the outcome there. Are you using the tape when executing trades and looking for signals on there, or are you mostly taking your trades purely on technicals? I very rarely read the tape. The only time I read the tape is after hours, if I see like a significant bidder or a significant, a significant offer. Also, with certain circuit broken stocks, that becomes a big deal because you could see the shorts piling in. I never really knew about, like, that's actually something Derrick taught me. I've been doing this 20 years. I met Derrick 5 years ago. That was like one of the first things I actually learned from him was how to, I didn't even know what a circuit broken stock was. And like, that just shows how like how many dumb traders there are out there trying to make money in this business. And like, there's so much more that you can learn about things that can really help you to trade. Like learning what a circuit broken stock was, learning that a short can only show his size on the offer, he can never hit the bid. Like, to me, it is huge, especially for a short seller like me. And most of you know, and if you don't, I am a perennial bear. I hate positive things. I'm a negative person, so like, I am a perennial bear when it comes to the markets, and so I like to short things that are going up. I very rarely am on the other side of that where I'm just like, hey, we got a good dip, so I'm gonna buy. Like, that's just not my nature. But certain things like that can yeah, I'm the George Costanza of trading, 100%. And so yes, un-American as well, and I hate money. That's the other line that many people use when they speak about me, because I'm always rooting for like the next Black Swan event. And honestly, it's funny because Arthur Cashin came out slightly after COVID, when everybody was like, oh, we're going to retest the lows and we're going to retest this. And he said one line that specifically sticks out in my mind, and I'll never forget this. He said, only bet on the end of the world. No, don't bet on the end of the world, because it only happens once. And so I size my trading when I'm shorting accordingly, because I'm never going to get that huge like 10% down day or 5%. Like, I just won't be there for it. But at the same time, I find a good way to make money shorting, especially with some of these like crazy moves that, again, people just, something's up a lot, they call their friend, he calls his friend, and there's so much more retail money out there these days than there were 10 years ago. 10 years ago, there was no apps. Like, you couldn't go onto your phone and buy a stock. My 22-year-old sister, who knows nothing about stock trading, called me during the GameStop craze and was like, I just bought GameStop. And I'm like, what? Like, at $300? And I'm like, you're insane. Like, what are you talking about? She's like, well, all my friends say it's going up. And I actually think her and some of her friends like made a couple of bucks on it. Like, they know nothing about stocks, but it's that kind of technology and kind of change in market kind of structure and participants and things like that. Why you always have to be adapting and you always have to be changing your style, because if you're stubborn and you're not willing to adapt to the market change, then you're going to be humbled very greatly by the market. So that's Jackie's question. Dave S. Hey Josh, I feel like you tend to look for shorts more often than Derrick, and I'm more often than not successful with them. Would you say that comes from a more bearish lean in general? Yeah, I mean, I think I just answered this. I am constantly a bear. Especially when I think, and I'll just kind of elaborate on it a little bit more. When I think of where our economy is today, we're in a raising interest rate environment. They're not done raising. I don't think anybody has a question about that. There's going to be another raise, if not more. I certainly don't think there was any shot that we see a single cut this year. Maybe next year, but I don't think there's any. But I honestly think the sooner they cut, the sooner inflation starts to get rampant, and then they're going to be in a really sticky situation, because they just did all this raising. Now they're going to start cutting. Now inflation starts to pick up again, and now what are they going to do? Start raising again? Or are they going to just have to let inflation kind of just run rampant? Are we going to see inflation even worse than it was? So there's like a lot of things in my mind where I'm like, I think the Fed is just stuck between a rock and a hard place, and I don't think they even know themselves like where they're going with this. And I think we're all kind of just, waiting to see how data comes in and things like that. But for me, I was at a couple of barbecues over Memorial Day. I have a friend that owns a tattoo shop, one of the largest ones here in the city. I have a friend that owns another friend that owns his own like construction business, and granted construction as well. But my friend with the tattoo shop said to me, he goes, tattoos are one of the first discretionary, like is a high-end discretionary income, and it's one of the first things people start to kind of cut back on. And I'm like, yeah, and like I've been in the camp that we're going to go into a recession and this and that. And, you know, he says to me, last month was the first month I had a down month in years because people are actually starting to feel it. I do the grocery shopping in my house. I go to the grocery store. Maybe prices aren't still going up, but they really haven't come down yet. And when you're a family living paycheck to paycheck and you are used to spending $80 a week in groceries, and now over the last 2 years, it's, $150, what you used to spend like $80, that can only last for so long. And I think, I just think there's a lot of kind of like hope that's keeping this market up. Like hope that, okay, inflation's going to subside, hope that the Fed's going to cut. But I think eventually that hope is going to run out. And I think that's when we're going to really see some sort of correction overall in the market in general. Like I am honestly in the camp, and I'm not a market predictor by any means. I'm not a long-term investor, so I don't do this. But like I see zero reason why we shouldn't test 320 again on the Qs at some point. Like I think this whole last kind of hype and nonsense in the Qs was just like latecomers to the party. I could be totally wrong. And again, that's why we're traders, not really investors. But for me, like, longer term, it's very tough for me to start saying, okay, buy something here and hold it forever. Granted, when Apple was a $400 million market cap, and this was early on in my career, and I turned to my boss and I was like, Apple's $400 million market cap, they're building this phone, they're building this, everybody's talking about Apple, we gotta buy it. And he literally turned to me and he goes, it's a $400 million market cap, you know what they would have to do to get it to 800 million? And he's one of the best traders at the time in the world. So like trading and investing is way different. You can't be great at both. You kind of have to stick to one camp. You use kind of your longer term thesis to kind of sit in the back of your head and say, okay, this might help me with shorter time frame decisions. But at the same time, you really just got to take the market day by day and kind of see what it gives you. The market doesn't care what your thesis is. And usually when so many people are in the same camp, the market will kind of continue to drive one way and just continue to hurt those people and continue to hurt those people. I also think that the consolidation here in the, like this whole range here in the Qs is really where we should have been. And once we broke out, there was so many funds and so much big money that were short here, thinking we would roll over and kind of retest this area. And at a certain point, they just have to, like, you're not going to put your fund out of business, and funds are okay taking $200 million hits, $300 million hits, whatever it is. So they're like, okay, I'm covering. Any little dip, they're covering. Buyers are buying. And so I think a lot of this kind of last 2-week, 3-week rally is just a lot of short covering, a lot of retail money, maybe buying late. And I think eventually the funds will kind of reposition themselves, and it might have started happening today where they're like, okay, enough is enough. IWM is way underperforming. Qs are way outperforming. And any point here, that's a great trade, like a longer term thing that eventually would have played out. It started happening today, but like short Qs, buy the IWM, walk away, see what happened. Like it might not happen that day, but eventually they kind of had to come back to parity. What I think is going to happen is the fluff in the IWM, which are the stocks that are most susceptible to interest rates, is going to, like, IWM is usually the one that's the last one to kind of go when like these kind of rallies are happening. And so what I think is going to happen is wherever it happens, 190, 180, whatever, 185, 190, 192, wherever it happens from, this kind of nonsense in IWM probably will die out. and we'll probably come back and test the 182, 180 level. And what I would like to see happen at that same time is Qs not regain their strength. Because if Qs regain their strength when the IWM sells off, then it's literally just rotation again. Markets are all about rotation. There's always money in the markets. It's just a matter of rotating. And you see it happening between indices, you see it happening between sectors, right? Guys make $5, $10 in the energy sector. They're like, okay, time to take off some of my energy exposure, time to add exposure to, you know, recreational or you know, travel or whatever it is. There's always rotation happening in the markets, and it's our job as traders and kind of like shorter term players to figure out where that rotation is happening and be a part of it. And I think that's exactly what you're seeing right now, is like that kind of rotation into the IWM, out of the Qs. But there's going to come a point where that's like, okay, now let's go back the other way. That's that. Pam, how do you choose the stocks you trade and game plan for the day? How many you tend to focus on? Yeah. So I started my career as an execution trader. It was my job to get in at 4 a.m., look at 5,000 charts a day, find 20 that were tradable, put them on his desk, and let him make the decisions which one we were trading and which ones I was executing on. So I spent years literally looking through 5,000 charts either the night before or the morning of every day. That has changed dramatically with the kind of, with, you know, chat rooms and newsletters, and so that work doesn't really, like, that work is done for you. How do I choose what I'm trading that day? I get into the room at 8 a.m. and I start reading what Pat wrote. Pat writes what was upgraded, what was downgraded, what had news that day, you know, who's making comments about what. That to me says, okay, these are things that I got to focus on. I probably have a list of about 100-ish stocks that are on my like watch list, like my focus watch list. I also keep like watch lists of every sector, just so you can kind of see when you glance at it in one look, like what sector's up, what sector, you know, you see green on one, you see red on another, like a heat map almost, but I kind of just do it in Lightspeed itself. But you can kind of look and see where you know, the strength is, where the strength's not, but that's how I do my game plan. Like I come in and Pat will say his stuff, I'll look at that stuff, then I'll go through the 100 stocks that I pretty much have on the same list every day. You know, the Teslas, the Apples, the Amazons, you know, the plugs, all that stuff, you know, the stuff we've been talking about for the last year. Of course, things come out of that list when like they're no longer fun and tradable, and then things go into that list when they become more of a trading stock. But it's really the same 100 stocks that I just look at, and you're usually able to find like 3, 4, 5 of them that have setups that you can kind of go after. I typically trade between 3 and 6 names a day, outside of the Qs and SPYs. I am like a trading junkie. I love to trade. I always like to be involved. And so a lot of times I'll trade the Qs and the SPYs in small size just to kind of get that like fix. But at the same time, like real like singular names like a SoFi or a Labu or, you know, a Carvana or something like that, I tend to only trade 3 to 4 of those a day. You don't have to be everywhere. You can't be everywhere. It's impossible to keep track of. All you need is 1 or 2 that you really focus on, that you really watch kind of how the price action goes. You find the levels intraday, you see where the buyers are, you see where the sellers are, and you could literally like trade around a single name, you know, all day. And if you're kind of riding that wave, you really just, you know, can catch good money on it. Most of my trading is done between 9 a.m. and 11 a.m. and anything that I go to after 11 a.m. is either going to be an add back or kind of going back to a prior name that I was in the first hour and a half if I made good money in it, and or maybe a random Q or SPY, or maybe a random like just news headline that pops and I'm trying to scalp it for, you know, 20 cents, 30 cents, whatever it is. So yeah, that's the answer to that question. Nice to see you on the call. Thanks, Greg. How much do you rely on oscillators, RSI, etc. when executing your trades? So I don't have RSI on my list.
I couldn't even tell you how RSI works. I know that's like really mind-boggling, but it's the absolute truth. I just know that when it's over a certain level, people talk about it and they're like, oh, the RSI is 80 or whatever, and in a big cap name, that's huge. So typically I'll let somebody else tell me, like, hey, like if Pat says the RSI is 95 or 92, I obviously know that's a big deal, and it probably gives me a little more conviction on what I'm trying to do. But I don't use RSI on my charts. I don't use Bollinger Band. My charts are as simple as they could be. I don't draw trend lines. I can do that in my head. I don't draw support lines, resistant lines. I can do that in my head. I can see all that on a chart. Again, I've been looking at charts for the last 20 years and spent the first half of my career, like, that was my job, was to look at charts and find the charts that I knew that this guy was looking for. And so for me, I can kind of just draw and see those things, like, just by looking at the chart. Oscillator, yeah, certainly. But only in extreme overbought or extreme oversold conditions. So like when an oscillator goes to 80, you know, and which is technically overbought, or like 75, 80, like I notice it, but I don't really care that much. It's like during times of COVID when the oscillator gets to like minus, you know, I think it got to like as low as 110 or 115, which is the lowest reading I've ever seen on the oscillator. Like that to me is obviously a time when I'll put a lot more weight into it. So yeah. Kind of like having rotations. Thanks, Cody. The idea here is that Derrick is not always around. Pat is not always around. So we were waiting for a day that I'm in the office with Derrick. He got me set up on his thing. And so hopefully going forward, we're going to get the access enabled for me. And from time to time, I'll jump on and do these meetings. Can you discuss rotation setups? Yeah, I mean, I think I kind of went through this. Like, you know, the market, if you think of like a pie chart, right? That's 100% is a full round circle, right? That's the money that's in the markets. Yeah, from time to time, money comes in and money comes out, but there's always going to be a core portion of. There's always going to be a core group of money in there. Pension funds, institutional funds, you know, 401ks. There's always going to be a certain amount of money that's kind of in the market, but it doesn't stay in the same spot that every day, or it doesn't stay in the same spot all the time. There's always going to be rotation from sector to sector. Again, typically 3, 5, 7 has always been my rule. 3 days, 5 days, 7 days. That's kind of what I look for. But I'm not perfect. I make plenty of mistakes as well. Again, I think I've been doing this long enough, and I'm in the unique situation where I do tend to be right more than I'm wrong, and that actually allows me to kind of make some mistakes along the way and yet continue to be able to make money trading. I'm impressed you shorted cues on the rally up. I'm curious, shorting into this contrarian trade, where do you set your stop loss on cues for each trade? Do you bring your bearish positions back home? Really ask, because we have witnessed multiple times in many text entries. Again, it's not that simple. When I'm shorting an AMD at 126, I have zero stop in mind. My stop is there's going to be a day when I throw up from losing too much money and I just have to say I'm out. Like literally, like where I'll get up to go to the bathroom, I'm like, I got to cut bait here, and then, you know, I sit in my room for the next 2 days and cry. Like that to me is the stop. There is no. When you're playing a trade like that, it's not a pure technical, it's more of a feel. Like we're getting close. Size yourself right so that, you know, if you are wrong longer than you thought you were going to be, at least you're still kind of able to hang on. And a lot of times trading that way will make it so that you were right, but your entry might have been wrong, and so you're basically covering or selling closer to when you get back to break even versus actually being there for the entire trade. If you have a set stop level and you have a kind of a target in mind, or even just a set stop level, you can play off that level and just let it play out. But if you're kind of doing the feel thing or the price action thing, it's a game of feel. Like it really is. Like what is my intuition saying? What is the market showing? What are some other individual things saying? Where's the relative weakness? Where's the relative strength? And then it's really just a matter of like money management at that point, like making sure that you're not, you know, losing too much money to, you know, so that you can't make it back type thing. And yeah, the second part of your question, it is extremely hard to control risk overnight. And a lot of times you are taking probably an unnecessary amount of risk for not a proper reward. But that's kind of the way I trade, right? You're supposed to, in theory, as a beginning trader, risk 1 to make 3 or 4. There are plenty of times when I'm risking 1 to make 1. And honestly, there's probably times when I'm risking 1 to make half or risking 1 to make 3/4. That is not the way to trade from a technical perspective. If you're strictly trading from a technical perspective, you should be able to risk 1 to make 4. Do that all day long. You can be wrong 80% of the time and you can still make a phenomenal living in this business. When you're field trading and it's not so black and white like that, it's feel on the entry, but then it's also feel on the exit. And I've probably cost myself a lot of money by not, you know, by being early on something, adding when it gets higher, you know, covering just to get back to break even, and then I actually watch it roll over finally for another $5. And if I stuck to like a true technical game plan, I could have just waited for like kind of the spot to get in before it rolled over $5. But again, it's more of a feel thing. Like, you know, get your risk covered when you can, especially like even on the feel stuff. But then like for me, it's feel on the entry and feel on the exit. I didn't even really know much about, like, I didn't know what an inside bar was before I met Derrick. I'd been trading 15 years before that. Like, I learned from a field trader. I learned from a trader that literally could trade without looking at charts. He could pull up his quote track and look at, you know, what was down, what percentage. He knew what it was yesterday. He knew where it was the day before. Okay, this is down 8% in 3 days. Time to buy it. Like, never even looked at charts, you know, outside of, you know, like he could do it that way. Yes, we looked at charts because obviously I said I found charts for him, but you get what I'm saying. It was like, it was more of a feel thing, like impossible to time it perfectly, but at the same time, like being there to participate and at least capturing some of the move. I see. Keep it simple with the charts. Okay, thank you. Agree with the thank you. This is perma bear. Always trade on hunch. 90% of work. However, that would always kill his time inside to do the same over and over. Wait, let me read this question again. I am like you as well. Perma bear. Always traded on hunch and 90% of the time correct in the direct. Timing and size. Yeah. Even though you're doing feel trading, you're on a hunch, whatever it is, you have to still recognize that the market's going to do what it wants to do. And the old saying, you know, the market could stay irrational, you know, longer than you can stay solvent, especially in this market, it could not be more true. So whatever, let's just say, for instance, you think at worst something could go up another $3 and you size it accordingly. Throw an extra $2 on top of it and think in your head, okay, well, maybe it can actually go up $5. The max I see this, the max I can see me being wrong on this is this thing's going to go up another $3 when I'm shorted. And then I say to myself, okay, well, that's the max I see, but, you know, there's going to be something else in there, so let me throw another $2 on. And I kind of size accordingly. So when you're field trading, it's much more important to kind of play smaller size, try to be there for bigger moves, not get kind of stopped in and out between the, you know, the intraday kind of mess. Always be looking for pivot points to add and take off. Like, it's not uncommon that I'm in, you know, 500 shares of something and I'm buying and or selling 100 shares of it intraday 30 times on pivot points. But my original 500 shares, I'm like just letting do its thing. And the idea is to capture money intraday to kind of, you know, so that even if you are wrong, you're at least capturing some money intraday so that your average cost gets better and better and better. I'm doing something else. I know you are, Judy. And Judy, you happen to be one of the better momentum traders that I have ever seen. I'll just throw that out there. R2 by highs. I must never do that. Again, Judy, you're a momentum trader, and early on the momentum was there. It just changed on a dime because bigger money is like, okay, I'm gonna sell here. And so it's been your market for a few months now. You, as a momentum trader, should have made, I'm not calling you out, but I'm just saying a momentum trader in general should have made phenomenal money over the last couple of months. And so a day like today, 100% a momentum trader is going to get hurt. But the idea is that you've been making enough money over the last couple of months that today is just a blip on the radar. Yes, Qs went down 6, so it's probably like a bigger blip on the radar, but it should not be. It's like that's how momentum works. You play it, you get paid. You're never going to catch the exact top to sell out on. So of course there's going to be a day when you get big, when you get caught, and that's just the way it is. Thanks to the minutes, to add the position once trade is going in a direction. Depends, but usually not. Unless the setup intraday, unless I've taken some money off the table and I'm back to like more of a comfortable position where it can go back up, and or now it's like breaking a low and I'm like, okay, this is almost to me like a totally different trade. So it's not uncommon for me to trade a symbol like multiple different ways in a day where I'm like, okay, like I did my kind of feel-ish trade here, and at the same time, like now all the momentum guys are piling in because it's breaking a low, and so maybe I'll add there. All right. I got through all the questions. I hope this was helpful. I actually have a 5 o'clock meeting, believe it or not. Any last questions before I jump off? Yes, that is the plan, Eddie. I am going to do the chat with Greta. There's bigger and more important people than me. I'm just a little peon here, so eventually they're going to have me on. No, I'm just kidding. We are going to do it. I think they're doing Derrick one more time, and then Scott the next time, and then I think I am up after that. Judy, someone will type it to you. Chat with the trader, chat with, I forget what it is. David Prince is actually on it right now at 5 o'clock. Chat with Greta. He's very talented, very good trader. I encourage all of you to go watch it if you have nothing else to do in the next half hour. He is fantastic at what he does, and he also is more of a field trader. I don't have the link to it. How do they find that, Amy? LinkedIn? Yeah. I think you go to LinkedIn and Greta. Oh, somebody just posted it. Perfectly. Go to that. Sign up. Watch it. Derrick did it twice now, I think. Pat did it twice. Redler did it once. David Prince is on today, and I will be doing it soon. And I will definitely be back on a meeting another day. Have a great night, everybody.
Yay! Great job there, Joshua.
Great.